Okay, I'm told we're live now. Good afternoon to you, ladies and gentlemen, at least the early birds that have decided to join us once again for this financial education program. It's always a pleasure having you guys here. I'd like to know those of you, maybe if you could just let us know you're present in the comments section and not just watch us on Facebook, but also just let us know that you're present and catching us live and clear. If you've got problems with the audio, let us know as well. So On the Money is the name of the chat series that we are in. The name doesn't change, but what we do change are the guests that we have and the guests that we bring you every fortnight. Today, we're going to be having Mr. Fungai Sekete, who is part of the Old Mutual Microfinance team. And we'll give him time to introduce himself in due course. For now, I just need you to know that we're going to be chatting about a specific sector of the economy today that we can know it's said to be the second largest in the world in terms of its contribution to the national GDP and the largest employer in the country. And I'm sure you already know which sector I'm talking about. I'm actually referring to the informal sector. So Fungai is here today and he's going to just help us dissect a couple of things in that sector, specifically, access to finance by informal sector participants. So Fungai, how are you?
I'm great, Patrick. How are you doing?
I'm very well, man. It's good to see you once again. I know we have interacted before on different platforms, but it's good to have you on the Money program today.
It's such a pleasure to be speaking to you today.
Great stuff, man. It's a pleasure having you. I'm just going to give you some time to introduce yourself, but before I do that, let me just ask our viewers kindly to let all their friends and family know that we are actually live right now. So if you feel there's someone that might benefit from this conversation that we're going to be having on the informal sector, SMEs within that sector, and access to finance specifically, just let them know that we have started now. And feel free also to just click the share button on your screens on Facebook so that all the people that follow you and like to know what you're doing can also just view this program. So Fungai, back to you now.
Yeah.
Could you just tell us a bit about yourself? The little interesting things that people probably don't know. I know you might be tempted to tell me about your involvement with Old Mutual and Microfinance, but I'm keen on knowing, the interesting stuff about you that could get our viewers engaged.
Sure. It's funny being asked speaking about yourself. But on that note, let me try maybe to speak about my passions relating especially to this field that we're going to be speaking about today. In the field that we operate in Old Mutual Finance, which is development finance. This is actually a field that I'm quite passionate about as a person who's always been in the onset of my career, being passionate about capacity building, youth development. Maybe an interesting fact, I think this passion really started when in my early years of my professional career, where I started in the education sector. Then I branched off to training and development. We were working with youth and women mainly. So this is where I really grew that passion to try to find ways and means where we can then help the youth grow in terms of education, in terms of entrepreneurship and skills development. So when I found my way to Old Mutual Finance, like you rightly said, which is a microfinance institution, and we are really working in the financial inclusion dichotomy, is where we are actually finding my space and finding my stride and trying to help developmental issues being more pervasive in our economy. So yeah, this is really what I do for a living, and I'm kindly asking the viewers to be quite engaged in the discussion, as we are discussing how finance institutions and SMEs interact and the challenges that SMEs encounter.
Okay, thank you, Fungai, for that. I'm seeing that there's an activity already beginning to take place on Facebook and the viewers are getting engaged. I'm seeing some comments from Robson, there's Mufare as well, there's Makam Siva, and all the guys. Thank you guys for joining us. We're going to be getting into the questioning now. Fungai, I did say we're going to be talking a lot about the SMEs and specifically, because I want us to zero in on the micro SMEs, because when we speak about SMEs and SME banking, I know a lot of commercial banks have SME banking departments. But then if you look at the way that they operate, they don't normally cater for the micro SMEs, or maybe what we call SME is not what they will be looking at, because now you're looking at how formal the business is, whether they've got their financial records on check, and whether they've got immovable assets as collateral they can put up for loans. But when you are now defining SME in your space, I mean, what's the difference between, the micro, the small, and the medium enterprises? How do you differentiate between those three?
Okay. Interesting question that, Patrick, because I think worldwide, we really don't have a standard definition of what an SME is. But I think maybe what is agreed on is maybe the areas of, or should I say segmentations of that definition. Some look at the number of people being employed, some look at the values in terms of assets that company has. But like you rightly said, in our context, and a small enterprise, maybe we look at the informality of the business model in terms of registrations and in terms of business operations. So really what you're looking at is you're looking for vendors selling on the streets because it's a business, they're generating some income. So I think when we're really speaking of micro, we are coming from that standpoint to look for this person on the street who's selling airtime to big corporates that are maybe running manufacturing industries. So there's a very large spectrum where you include people in one bracket for SMEs. Yeah.
Okay. Now, Fungai, I just want to know why is this segmentation important? I mean, because you're in the financial services industry and microfinance more specifically. Then there's the next stage that comes after you being the banks. So when you begin to segment the informal sector that way, why do you think it's important to have these different segments to it?
Okay. So like I just said, you're really looking at a wide range of individuals, wide range of businesses, wide range of models. So segmentation will really help in terms of requirements that you'd ask when you're trying to maybe tailor a product for that market. For instance, right now, there's a strong push towards KYC light financial products that are tailored and directed to some of these players in the market. We are calling them micro enterprises. So you'd find someone who's selling tomatoes in Micro and Sekete would probably be someone staying in Sekete where they don't have the conventional proof of residence. So it's really difficult for you to put one product that caters for this wide range of enterprises. So segmentation will then help you try to come up with specific products that can speak to a limited area of that whole sector. So that also then speaks to the policies that can be made to promote formalization and expansion of their business operations. So that really is the major reason why it's important to segment that sector so that we can get a better understanding of who we want to serve.
Okay, now I noted that you used some term like KYC light. Could you just break that down for our viewers in case some might not understand? I know KYC to you is a common acronym in your industry, but then there are some people might just be wondering to say, what is KYC and what do you mean by KYC light? What's KYC heavy?
Okay, thanks, Patrick, for that. It's a temptation, when you're speaking to someone you interact with every day that you can just throw in terms there and just forget you're also speaking to a wider audience. So by KYC, we're really speaking to those documents that financial institutions ask when you're submitting an application so that they can identify who their customer is really. So this starts from documents like your ID, your proof of residence, your proof of incomes. So like we were just speaking, interestingly, like proof of residence. Right now, I think the standard for banks was that they would ask for utility bills. But, with this economy where you've got people in resettlement areas, people in formal settlements, we really don't have utility bills for that. But that person still wants to consume a financial product from a financial institution. So should they be disqualified that they do not have a utility? So this is where we are then trying to find more innovative way to include these people. This is where I was then speaking about financial inclusion, where, RBZ and the Ministry of Finance and Ministry of Small and Medium Enterprises are really pushing for financial institutions to really look at ways that they can incorporate the previously unbanked. Using that term to speak to people who are actually being excluded from enjoying financial products by these, conventional definitions of what maybe KYC document is. I even mentioned proof of income. The traditional view of that is one would be asked to provide a bank statement, but not all of us are formally employed. There are people like the sector we are really speaking about that are selling airtime, selling their wares on the streets, people manufacturing shoes from leather that they buy in the industry. These people might not actually be channeling all their, income through the bank, but they are still getting some income somewhere, maybe using mobile money as forms of exchange, maybe using cash. These people are somehow generating an income that could be used as a way of analysis for them to then get maybe a loan from a bank or an MFI. So really, these documents are really critical because they are some of the issues that were used as, segregators when someone is applying for a loan at a bank or a financial institution.
Thank you for that, Fungai. I'm constantly glancing at my Facebook comments to see what people are saying, and I'm noticing that a number of our viewers are actually calling out their friends to join in. Thank you for that to all of you that are doing this. There's an easy way, just click the share button on the screen and then share it with all your contacts on Facebook. But moving on also, I know you spoke a lot about the KYC, what it means, financial inclusion, and the efforts that the government and the Reserve Bank are trying to do in order to get, the larger part of the populace that's unbanked access to these financial products. But what actually are the types of financing that are available to the SMEs currently in Zimbabwe? What could the micro and the small, medium enterprises that are out there actually go to a financial institution now and find available for them?
So there's a wide range of ways that someone can finance their business. I know financial institutions out there have got savings products which the micro SME can utilize to save some money. Then they can use that to set up a business or to use it as working capital. They are also providing loans like what we do in microfinance. The company I work for, my own Micro Microfinance, we've got various loan facilities that we can then offer to micro SMEs, like your order finance type of loans, where someone gets an order to supply, say, shoes at a local shop, and they need material to then produce that order. So there are those certain type of loans that we can then provide. There's also, banking institutions that are providing, equity release sort of facilities where somebody can offer their house as collateral and get a loan. So there are a number of ways that an SME can actually get a loan now. But speaking to that as well, I think there's a little bit of more work that needs to be done, especially by financial institutions, to try to be more inclusive, like we then said, in terms of providing finances to SMEs. Because one of the critical areas that SMEs really cry about is access to collateral when funds are being offered to them. I know a lot of companies out there are offering loans of various types, But one of the major issues and most common issues in all those loans is they need to have certain collateral associated with that loan, which most of our SMEs don't really, have or qualify for.
Okay, thank you for that. Now, you'll also find that having watched this conversation, perhaps a lot of people out there might also then just begin to see opportunities, because one of the reasons why we have these programs also is to increase the financial knowledge out there so that people can know what products are available to them, what options they have in terms of, access to finance, maybe insurance products and everything else that the financial institutions might provide, and specifically what we as Old Mutual also provide. But what portion would you then give, to people who might then watch this and then decide to go and access loans, because they now know and think they are available? I know that there are a lot of assessments that you do and cautions that you might then give to clients out there, interest rate differences between what microfinance would offer and what the banks would offer. I mean, just short, what caution would you give to clients that are watching and thinking that they might then access loans because they do not need to put up collateral for them?
Okay. Thanks, Patrick, for that. As you asking that question, I remember when we were sharing an office first, we used to have a number of customers, some coming to your office on the left wing of the room, and some coming to ours. And it was quite interesting to see how varied and different these types of people would be. And one thing we used to, talk about and engage with some of these clients is we seemed to be looking at the same template when we're looking to fund SMEs. So, there's a standard that banks really look at, and some of it should be something that each SME can, look towards and correct, especially in running their business. One of the other things that I'm speaking to here is just general character in terms of handling finances and so on. One critical element that SMEs need to really work on is record keeping, because in order to get finance, somebody needs to see the flow of money in the business, because there's no business when somebody don't see how money is coming in and how money is going out. So usually most SMEs don't pay particular attention in terms of record keeping, in terms of providing the evidence that they've got the ability to pay back the loan. And on that regard, some of them really shoot themselves in the foot, because when they get a loan facility, some guys in the SME space don't pay back. I know at some point you were running with youth fund loans under CABS, and one of the other headaches that you used to have was many guys would just not pay back the loan. So that really is an area of concern, especially when we are trying to finance loans to the SMEs in terms of their credit worthiness and their credit integrity. So there are many companies that then provide a basis where we can then assess how SMEs provide. But also to speak to that is that we also need to build that database that can then provide financial institutions enough information about the credit rating and the credit performance of SMEs in order to make a good judgment on which SMEs then to provide loans to. So there's a number of issues that you can then look at there. Issues like condition of the loan actually. So this is also speaking to the product that can then speak to SMEs. So when they come in to look for a loan, they need to have a specific idea of how they're going to use funds that they're looking. I'm speaking here thinking of a certain situation where somebody comes looking for a loan and they want to finance a different enterprise to the one that they are showing me in the records there. So somebody has an order and is speaking to me, showing me records of a working capital, a going concern that they had. And so they didn't have quite a clear vision of exactly where they wanted the funds to be used in the business. Are they looking to buy stock? Are they looking to buy an asset in the business? So they need to have a clear idea of purpose to the loan, because that's also a critical issue that financiers also look at when they want to provide finances to SMEs.
Okay, thanks for that. Some of the responses that I gave are the questions that I'm actually going to ask. It's almost as if you're reading my notes and you know what I'm going to ask. But there's a comment here that I just want to read from Terence Mgova on Facebook. And he says he works with a lot of vulnerable communities and folks who run these micro entities. And he sees that financial literacy is alarming in those sectors. So he's asking to say, is it possible to incorporate a survey to gauge the capacity of people to understand financial concepts and therefore make informed financial decisions before taking the financing that's offered? And I think this is one of the reasons why, as On the Money, we flight these programs to just try to increase awareness on financial issues, that people can just log in and find out what decisions they need to be making based on the information that they're getting from these programs. And then there are a lot of comments also that go on to say, this is good information and we need to be sharing it more and broadcasting it. And this is where you, as our viewers, also then come in to just help by sharing this information on your profiles and just to let the people know that we are actually live. So thank you for the comments that are coming through. Feel free to ask questions as well. And if possible, Fungai will address them. But moving on, Fungai, when you look at the regulatory framework and the situation that we have in the country, I mean, how feasible is it for SMEs to seek external financing for their businesses, just based on the frameworks that we currently have?
To be honest, Patrick, that, is an issue of two sides to it, because there has been some efforts that we need to applaud that have been made by government and RBZ in terms of promoting an environment that is conducive for SMEs. For instance, the launching of SMETCO, which is actually a company formed as an act of parliament in the 80s, to try to promote a framework where SMEs have access to finance. So these are some of these elements where the legislation is being made to actually provide key and sound decision making for banks, especially when you look at the policy framework for SMEs and strategies framework that was made with, around 2011 to 2016. This is where we're also then speaking around the financial inclusion issues, where the Reserve Bank actually tasked financial institutions to have an area within the business that they should look towards the financially excluded, the informally operating enterprises. So these are quite difficult, really, Patrick, to give judgment, because there still needs some improvement in terms of those policies, especially areas around consumer protection for lenders as well as for borrowers. Because right now it's quite difficult for you to pursue a loan, especially within the structure of our judicial system. Sometimes it takes forever when you are trying to collect back what you've lended to someone. Also, there are areas that we also need to strengthen in terms of providing information, like I was speaking about issues to do with credit information. In other first world countries, it's quite easy to get credit information about a certain borrower as they come through. But I think RBZ has come up with a credit registry index where they are trying to build in database for financiers to actually come up with information and decisions to provide for loans. So these are critical areas that in terms of regulation and legal legislature, the country and the sector needs some working on.
Okay, thanks for that. I'll just add some of the comments that I'm seeing here as well, because I'm not getting any questions so far. There's Robson who's saying that unfortunately it's 4:30 and he needs to be leaving and going home. I'm assuming that he was viewing from his workplace, and he says, please make sure the video is available. Robson, please do travel safely. The video will be available on the Old Mutual Facebook page. You can always catch up when you go home or when you get home. And wise words as always. These are some of the comments that are coming through. Thank you, guys. Now, Fungai, when it also comes to now I just want you to speak briefly about the challenges that SMEs are facing. I know when we began the show earlier, we're just talking about that SMEs and micro SMEs specifically face a lot of challenges when it comes to access to finance. We spoke largely about the issues to do with collateral. But from your experience, what are some of the other challenges that these SMEs face, the SMEs, not SMS, these SMEs face when it comes to financing? And in the same token, what challenges do the banks have when it comes to assessing these SMEs for financing?
Okay. So maybe one of the other critical issues that maybe strikes me is the lack of understanding or appreciation of the environment, or should I speak of the business models that SMEs use. So this is usually an area that is difficult for SMEs to convince financiers that their business model works and they're bankable. Take, for instance, somebody who's doing cryptocurrency right now, which is suddenly the new surge in the business sector, business environment. We don't really have too much information on how to make a credit assessment of somebody who's into cryptocurrency. But you'd note, I was just reading the news the other day, there's a company called Coinbase in America that recently sold for, I think, 100 billion when they listed publicly. So you'd find there is value in such business models. But maybe the challenge we have is maybe a lack of appreciation of how these models work in our economy. So these are some of the challenges added to limited value-adding capabilities and competitiveness of their business models, as well as no banking culture to provide a track record. I think this is actually one of the major issues that's really cripples SMEs when they're looking for funds. And I think it works on a two-way. But I believe a building of trust, especially with promotion of legislation and regulation, this can actually, most SMEs do not channel their money through the bank, but they still expect the bank to lend money to them. So there's a clear lack of trust between the two. But if that is then, rebuilt, it can then help banks to then provide loans to such, because it's quite difficult to provide a finance to somebody who doesn't trust you with their money. It's also difficult for you to lend money where you don't know how that money is flowing in the business. I was speaking to that earlier when I was speaking of record keeping. These people sometimes sell and they don't even have a book where they are just writing, sales records to say, on this date, I sold this item for this much to a certain person. So record keeping is actually a key challenge, especially improving how money is flowing in the business. So that becomes a challenge in terms of SMEs approaching banks to then seek for that. The other challenge is also lack of management capacity and structural issues within SMEs. I could run a company myself and my wife and our 2 kids, and we are running a tuck shop at the house. It's a business that's running, but it's at times when financiers are looking to finance such businesses, that lack of appreciation and the conventional templates used for analysis, sometimes especially on management structure and management capacity for those SMEs. SMEs also becomes a challenge when you're trying to then fund and provide finance to them.
Thank you for that. I'm seeing questions that are coming up on Facebook, and it's now interesting. And there's a certain gentleman here called Gift Paulos. I know this gentleman, I must say. He was my leader in high school, and the questions that he's asking are really questions that you might want to take. And as you respond to them, I'll just allow you to market yourself and give you the platform to do so. It's only fair because it's going to speak a lot about what you're already working on in your day, in your 8 to 5. Now, the first question that he asks is to say, what's your minimum and your maximum borrowing threshold, right, for the SMEs? Then he also goes on to say, what's your turnaround time for a lodged application form? I know that's a very important one, and people want to know that if I come to you with a time-sensitive application, can I get my money within 24, 48 hours? So the first one is the minimum and the maximum threshold, and then what's your turnaround time for a lodged application? I'll read the rest if you respond to those.
Okay. So I think the minimum really is something we are trying to be flexible about because of the, remember when we were speaking earlier about the diverse nature of the micro SME. But in terms of our loan products, we've set the minimum at the equivalent of 100 USD, depending on the rate of the day. So we are really looking at somebody who's looking to buy, say, 5 buckets of tomatoes to resell. $100 can actually then help. Then the threshold going up in terms of the maximum loan value is actually dependent on the cash flows that we see in the business. So somebody who's looking for a loan who's selling airtime obviously looks for a loan that's different from somebody who's selling cars, who's operating a castle. So the threshold are really dependent on the cash flow of the business and the model of the business that they're looking at.
Okay, and then you respond to the turnaround time.
Oh yeah, I'd forgotten about that. So we are looking to try to serve clients within 3 working days, but it's also dependent on the product we're speaking to. We've got some products that we've actually put ourselves to actually respond and provide finance within 24 hours. But I think the maximum turnaround for us should be within 3 working days.
3 working days from submission of a complete application form, I take it. I know some might have missing IDs.
Yes. So the work, the turnaround is really when we have compiled all the necessary documents for us to say this application is complete.
Okay. Thank you, Fungai. Now there's a question that's coming from Vicky, and she's asking to say, is the RBZ credit index scheme currently under construction, or is it fully operational? Now, I must say I'm not familiar with the credit index scheme. I'm not sure if you know about it. I do know that there was a credit one that they were trying to come up, a credit registry rather, that the RBZ was trying to come up with. So I'm not sure if this is the same facility that the viewer is asking about. Would you know about the credit index scheme?
Not particularly. I'm tempted to think they're referring to the credit registry. That I'm sure they were still working on. Trials have been done, but I'm not sure if it was now live. But they were working on such something of the sort.
Okay, thanks, Fungai. Thank you to you too as well, Vicky, for the question. Just kindly clarify if you're referring to the credit registry. If it's a credit index scheme, maybe you could just educate us on that. Learning never stops. There's also another question again from Gift, and he's saying, do you finance startup firms just from incubation? Asking on behalf of a colleague, barely 2 months in operation. I think that's the colleague that's just starting up his operation now, and he wants to know if you finance startup companies, or is there a minimum operation period that the company needs to go through before they can apply for financing?
Yeah, so interesting question. And I like that he also then provided a frame of time to say what startup is talking about. Because I think it's usually an issue when somebody says startup. A startup company can be defined as a company that's operating for a year or so. So I would say yes, but we're looking for companies that would have an operational history for at least 3 months. Those are the ones that we are working towards, because at least I think the standard is in a quarter, a company would have generated enough, trading history and trading records for us to make a decision on their credit worthiness. So really our operations and our loan facilities are open, starting to companies after 3 months.
Okay, thank you for that, Fungai. Gift, I do hope you were answered. The minimum is 3 months. I noticed you said your friend is barely 2 months in operation, so they could just give it another month just to keep their records and put everything in order before they approach Fungai at Old Michelle Microfinance. So, there's also a comment from Terence, and he's saying the RBZ credit registry is up. It's up and running. So I think this might help Vicky, who was asking. So kindly note that the RBZ credit registry is up. That's a comment from Terence. And then there's a comment from Tafara who's saying SMEs need to be educated on things like taxation and company registration. They are not known everywhere, yet they need funding. Okay, thank you for that. We also do have a program where we educate people on tax issues. We've actually had Zimra come through to educate people on that. Just kindly send your details and we'll just direct you to the platforms where you can get that. Just back to my questions now, Fungai, and this is for you. What alternative financing instruments are there? Are there any other instruments that exist apart from the ones that you've already mentioned that SMEs can then use to fund their businesses?
Okay, before I go to that, interesting, you're talking about tax issues there. I was speaking to a friend of mine, a colleague that I used to work with earlier in the morning when we were posting about this program, and they sent me I think a message that I think it's key to share with viewers. So allow me to read that, Patrick, if it might help someone. So you are saying one of the benefits and advantages of getting a contract with big companies requires contractors to have tax clearances. Therefore means that tax clearances increase your chances of getting contracts, especially in big companies. And in addition, you can encourage SMEs to register companies, either a PLC company or a PBC. And again, this will increase chances of getting businesses. Established corporates ask for the company registration documents. You are speaking of even payments from contractors as SMEs registered as on tax clearance. Also helps improve your incomes, as those that are not registered will also then be they'll also be subjected to withholding tax. So those are some of the benefits of actually having a business that is compliant in terms of tax registration. I thought that might actually help someone who's listening into benefit from that. Then coming to your question where I say alternative funding options. Remember earlier when we were speaking and I was giving an example of Coinbase. That company really provides an example of a company that started from venture capital, from venture. So this becomes one of the key alternative finance instruments that people can actually utilize. I know, Patrick, in your division now, you're working with a hub that is trying to promote SMEs in terms of establishing operations. And I think this is key, especially in providing exposure to investors that are actually looking for vibrant and innovative SMEs that they can actually provide finance in terms of investment into. So venture capital is actually one of the alternative instruments that one can actually seek finance from. And especially now that we're becoming more outward and more global in terms of technological advancement. One key interesting, financing tool that I saw people doing, and utilizing is crowdfunding. So this is just basically a platform where you go and explore and you expose your ideas and market your ideas on platforms such as GoFundMe platforms, and you can then find investors that are interested who then provide small amounts of investment in that idea or in that business. So these are some of the alternative financing models that are there. The other that I've been then seen as a growing trend is where private institutions, private banks or private microfinances are partnering with SMEs to then provide asset financing model products to the market. So this actually then helps that the SME is not actually using their own funds. They actually utilize money from the bank, but they would have not actually gotten a loan directly. So they are extending the loan to the customer direct in exchange for the product that they're actually selling.
Okay, thank you for that. I think that's important, everything that you have highlighted there. And, there's some questions here that are also coming up. There's Amanda Stonia, and she's asking to say, is funding for SMEs limited to working capital, or can CapEx also be considered? I think you responded to this, but, you could just touch on it again to say, are you only funding working capital, or do you also consider CapEx projects as well?
We also consider CapEx projects. I think this is where I was then talking about asset financing. For instance, if it's an SME who is involved in construction and he wants to, buy a Caterpillar, JCB, or some big equipment for his projects, we can fund that facility based on, the work that they are generating. They need to then provide evidence that they've got enough contracts that will generate enough income to pay back the asset that they brought to them over time. And with some models, that asset could actually be used as collateral for that facility. So that actually is a win-win in that situation where, an SME did not have collateral. They're buying an asset to use for the business. That same collateral is being used, but that same asset is being used for the collateral for the loan, and the institution gets their repayment over time.
Okay, thank you for that, Fungai. There's a question not a question, but a contribution from Terence once again, and he says, he's responding to what you had spoken about earlier with regards to the alternative funding options. Mm-hmm. And he says, I think when you are starting, it's a good idea and the first place to look for funding is family and close friends. I think these are some of the things that you also talk about, educating people on how to access funding. He says they can help you get off the ground. And I think that's important as well, because, if your family and your close friends cannot trust you enough to give you their money, how can you expect a financial institution to do the same? I know that's a big statement, and there might be many other dynamics that might involve that decision, but it's a good place to start, to actually just approach your family and your friends and ask them for the assistance before approaching a financial institution. When you build that traction, it then becomes easier to then approach people like Fungai to access funding for the advancement of your business. Now,
Patrick, whilst you're on that, interesting, you're speaking about family support. One of the other key issues that institutions look at, especially where we work, is where we look for surety or guarantors. So usually these are friends and family. And what I've noticed is there's a lot of mistrust, especially around supporting someone's application for funds. But also, to a financer, it actually then speaks to your character, like I was then speaking. If you're not able to convince your family to support a business initiative, it's actually difficult then to convince the third party or company to then provide funds to you. So I just thought it was quite relevant to then speak of the confidence you bring in your idea as an SME to try to convince and sell to your friends and family first before you go out looking for finances.
Thank you for that, Fungai, and for adding on and giving clarity to that. Now, one of the other questions I had was to say, how can the policymakers in the country just improve the current financial environment to increase this access to finance or lending to SMEs? Maybe just one or two points that you might think might help in terms of increasing the access to finance.
Yeah. So I think one of the key areas to really look at is trying to regulate the cost of funds. This is regulating the interest rates. I think it's important to do that because, in a market where financial institutions are also trying to survive, it's an easy temptation for them to keep hiking the interest rate so that they can stay afloat. But also this sometimes can then end up putting the funds or the loans being offered out of the reach of SMEs. So, in the microfinance space, you've got loans that are ranging starting from as low as maybe 7%, and they can go as high as 60% or 70% per annum. This is where you're also then, speaking to loan sharks that actually give you loans that are way beyond, your reach in terms of affordability, and people end up losing assets that they've placed as collateral. And that's also an area that the regulators can actually help in terms of consumer protection, especially on credit issues, because I know there's a bad rep for microfinance issues because there have been people that have lost assets because they took loans that they couldn't afford. So I think it is a critical area to regulate the interest rates so that the funds are accessible at an affordable rate to SMEs.
Okay, thank you for that. There's also Stanley, who's one of the viewers, and he's asking a question that says, is the credit scoring template the same across informal and formal micro SMEs? So I'm assuming that they are formally registered micro companies. Maybe they've just got they're formally registered with the tax authority. They're also formally registered with the company's registration. So they've got their CR14s and all that in place. And then you've got some companies that just do not have this registration. And he's asking to say, when you're scoring them for their credit, to get their credit rating, is that template the same, or do you consider that if a company is formally registered, it might be a bit more stable and you'll know where to find him at a given address?
Yeah, obviously the ratings would be different, and as well the templates are quite different. How we score and rate somebody who's formally registered and the ones that are not. I think this also is done to actually promote and give incentive to those that are formally registered, because that also speaks to their compliance to regulations. It also speaks to character as well, which is one of the key critical issues that financiers look for when they're offering finances. So the short answers to that is the templates are definitely different.
Awesome. Thanks for that. Now, I've just got one last question for you, and I know one of our viewers asked it also in the chat section to say, okay, initially when we opened up the program, I spoke about the informal sector in Zimbabwe and it being the second largest globally in terms of its contribution towards GDP. But the viewers also asking to say, what's your future? What's your take on the future of SMEs in Zimbabwe? I mean, what does that future look like for you?
Okay. For me or for SMEs, Patrick? For the SMEs.
For SMEs, yes. What's your take on the future of SMEs in Zimbabwe?
In Zimbabwe, yeah. I think the future is quite bright. Why I am tempted to have that, positive outlook is, we've really gone through the toughest times economically. And I think the SME sector is really the backbone of how we survived as an economy. And as things get better and as we're formalizing more, I think SMEs are coming to a point where they're developing their business models more. There's more appreciation of business ethic especially in that market. So it becomes easier now where finances come in to try to then provide funds where there is maturity in the market, in terms of service provision, in terms of business ethics, in terms of corporate governance. So really, the future looks bright for SMEs in Zim. And I think this is also then coupled with strides being taken in. I was reading the other day where our Ministry of Finance was announcing a fund that they got from I think it was the EU for a COVID recovery and fund and grant. So those things start to look good when you're assessing the outlook for SMEs, when there's now I think international capacity, international confidence in SME sectors to then provide affordable finances in the form of grants and so on.
Okay, I mean, thank you. This really has been a great session. I think we have learned quite a lot, and this can be attested to also by the viewers that have been listening in on the conversation that we have been having. But before we sign out, I'd just like to just give you a slot just to throw in one or two nuggets that you might want our viewers to know, or other business owners and entrepreneurs that are out there. What last two words would you have for the people out there in business?
Thanks, Patrick, for that. I think my parting words would be really an encouragement to SMEs to try to be more inventive in terms of product offering. I think this also, we've seen the trend that in Zim, one person opens a line of business. I think recently, a year or two, we've seen the growth of the second-hand clothing line. If one person opens that, everyone else, every other second shop is offering the same sort of business. So a diversification in terms of product offering also then helps grow the sector in terms of the SME space. So my encouragement is for SMEs to be more inventive in terms of product offering, and also to then maybe expose the SMEs to some of the products that we have within Old Mutual that can support the SME. I know I've spoken a bit about the SME hub that we have, that you run, Patrick. I think that also is a critical element, especially for those that are tech savvy and also are in the development phases of their business. They can approach Old Mutual and try to find space where they can collaborate with other entrepreneurs. This also is quite critical because it also exposes them in terms of network, in terms of investors that might actually be looking for innovative ideas. In Old Mutual Finance, we've got various types of loans, working capital loans that we're also offering. We've got, we're housed at the Escape Market, where we are also offering space to provide trading space, and that also helps because it draws the market to you. So those are some of the things that we are offering under Old Mutual, and we are quite happy to be supporting the SME space under our financial inclusion arm.
Thank you for those parting words. Now, to our viewers, there you have it. I mean, the show is quite diverse and covers a wide spectrum of issues. I know we've had fund managers on the show. We've discussed ETFs, which are the exchange traded funds. We have also discussed health and wellness, if you remember the chat that we had. And today we're dealing largely with the micro SMEs and the SME space to then say, how can people in these sectors then access funding? And Fungai has been with us, telling us a lot about how you can access funding, what you need to have in place, and how this funding can affect you in terms of your business, interest rates to consider, and a whole lot of other things. But do feel free to continue engaging with us if you need more information on how you can access funding as an SME. I know we also spoke about startups and how they can access the funding as well. And we'd like to have these questions coming in. And if you can make suggestions as to what you need to be hearing from us, we are more than happy to take those into consideration so that we can expand the knowledge on financial literacy. So up until we meet again in the next 2 weeks, because we have these programs fortnightly, I hope you can all stay safe and be well during this period. Goodbye to everyone. Fungai, thank you for joining us. It has been great having you on the show.
Thank you, Patrick. Always a pleasure to have a chat.
Awesome, man. Thanks a lot for coming through. So up until we meet again, it's bye for now.
Bye for now.